Hey guys, we're going to go over chapter 4. I'm going to actually have you go over your slideshow independently and take your notes independently because that's just basic information that I think that you can do on your own. So through this video, I'm going to give you a note sheet that everybody needs to create on their own. So go ahead and get a piece of paper and a pencil out. In this video, I'm also going to go over the practice problems together. So we're going to do problems 4-3 and 4-4 together. So on your note sheet, let's go ahead and get that pulled up. We're going to start off by writing the accounting equation. And I'm having some issues with focus here, so hopefully I can get it to focus. So we're going to start off with assets equals liabilities plus owner's equity. We're going to add a room. So underneath our accounting equation, we're going to write or create a T account under each one. And we're going to say that these are our account labels basically. So for our T accounts, the debit credit side never changes. The debit side is always the left side and the credit side is always the right side. As you guys are going through your practice problems, feel free to label debit and credit if you need to. But as we look at the types of accounts that are being affected, the rules change. So for assets, they are increased with a debit and decreased with a credit. As we cross over the equal sign in our equation, those rules change. They flip. So liabilities increase with a credit, as do owner's equity, and they decrease with a debit. So you can see that as you cross that equal sign on our equation, they've just flipped rules. Okay. So anytime that you have a normal balance, that normal balance will always be on the increase side. And I'll show you how that, talking and it was in my brain. I'll show you how that works as we go through our practice problems here. But this is basically just a chapter 4 note page that you guys can keep in front of you as you are going through the problems independently. And this is where you're really going to have to start classifying those accounts. So our assets can include cash, equipment, accounts receivable. Liabilities are always our accounts payable accounts, and then our owner's equity is our capital, expenses, revenue, and withdrawals. Now I do want to put a little star next to expenses because the rules for expenses are going to change, but I believe we go over that in chapter 5. So just put a little star there for now. We're not going to get there, but this is just a really good note sheet for you guys, okay? Alrighty, so we're going to look at problem 4-3 and 4-4 together all in the same video. 4-3 puts us on page 96 in our textbook, so let's go ahead and get that out. One thing that was new for this chapter was our chart of accounts or our general ledger. And that general ledger is just going to basically list our accounts out for us. And here in our book, it has our accounts numbered for us and listed out, okay? So here's our 4-4 chart of accounts, and then this will be our 4-3. So 4-3, we're going to indicate which 2 accounts are affected. Remember, we always have 2 accounts affected no matter what, at least 2. Sometimes there's 3, sometimes there's 4, but it is always at least 2. And then we just need to indicate if the account is debited or credited, and we have to make sure we're using these accounts here, okay? So on our paper here, get my pen. Problem number 1 says on May 11th we sold on account to Helen Katz an unneeded fax machine, an unneeded fax machine. So we sold it to her on account. So that means that she is going to pay us later, which means we will receive payment later. So we're going to do accounts receivable, Helen Katz. And you guys can see that I shortened accounts receivable. You guys are welcome to do that as well because it does get old writing out accounts receivable every time. Okay. Our other account that would be affected is that fax machine account, which I'm going to put under office equipment. Now, as we're going over our debit and credit rules, I always like to say if this is going to increase or decrease along with deciding if it debit or credit. So our office equipment, we sold that, so that's going to decrease. She owes us more money, so that's going to increase. So as we look at our note page, we can see that equipment, accounts receivable, those are both assets. So our accounts receivable is going to increase with a debit, and then office equipment will decrease with a credit. Okay. All right, number 2, we purchased camping equipment on credit, which also means on account, from Adventure Equipment Inc. Payment is due within 30 days. So we purchased something on account, we're going to pay for it later. I'm going to say that's accounts payable to Adventure Equipment Inc. We purchased camping equipment, so that's going to go under camping equipment. Okay. We purchased more camping equipment, that's going to increase. They owe us, or we owe them more money, and that's going to increase. This is where your accounting equation might come into play again. So if we know that camping equipment is an asset and that's going to increase, we also know that if we cross that equal sign, our liabilities need to increase as well. So since camping equipment is an asset and it is increasing, it will increase with a debit. And accounts payable will increase, but that increases with a credit. That's another really important rule. So if you want to put this on your note sheet, or you can put it wherever you want. I'd probably put it on my note sheet. I would just do a little star here. You're always going to affect at least 2 accounts, and you will always have 1 debit and 1 credit. You should never have a debit, and you should never have a credit. So as you are looking at your transactions, if you're like, oh, this one debits and this one debits, you'll know that that is wrong, because you will always have 1 debit and 1 credit. Okay. Alrighty, let's look at number 3. It says Ronald Hicks brought a filing cabinet from home and transferred it to the business office equipment. It automatically gives you 1 account that is used. So we'll go ahead and put office equipment. And since our owner invested that, that's going to be Ronald Hicks Capital. So office equipment is going to increase because he added that to the business. Assets increase with a debit. Ronald Hicks Capital will also increase. We can go back to that accounting equation over here, and those increase with a credit. So you can see for the last 3 transactions, we've had a debit and a credit for every single one. Okay, I'm going to have you do number 4 independently because I feel like we've got the gist of that there. So let's move on to 4-. Alright, so I actually have this filled out for us. Now's a good time to pause if you need to pause. But I just went from left to right, filling in all of the accounts that are listed in our general ledger from the 4-4 text. And I went ahead and labeled each side debit and credit, and then put their increase or decrease rules right next to them. So if you need to pause, go ahead and pause. But I'm going to get right into at least the first few transactions. We're not going to do all of this together. So transaction number 1 says that Regina Delgado invested an additional $40,000 cash in her business. So we know that Regina Delgado put this into her business, so we know that that account is going to be affected. So we have to determine, is it increased or decreased? Well, since she's putting it into the business, she's going to have more ownership in the business, so we're going to say it's going to increase. So we're going to go ahead. I like to put either the date or the transaction number next to it. I'm going to do the transaction number for this one just so I can kind of keep them in order. So number 1 is our first transaction, and we're just going to go ahead and put that in the credit side. Okay. We also know that she put cash in to the business, so it's going to be cash in bank, and that's going to also increase. So I also put another 1 next to that. So that way when I go back to check this, I can find my transactions that match, because some of these will start to have the same amounts and it gets a little confusing. So this is something I would get into practice of doing, so you can match up your transaction numbers. Also, it's also good to check if you have a debit and a credit for each transaction before you move on. That way you know that you haven't messed anything up. Okay. All right, number 2, we bought another car wash system on account for $27,000 from Allen Vacuum Systems. Well, since it says Allen Vacuum, I'm going to assume that it is that. And we've got it in that we owe them more money, so we're going to know that that increases. So transaction number 2, $27,000 in the credit side. We purchased car wash equipment, so we're going to put that under car wash equipment, and that will be a debit because it is increasing, $27,000. So we've got a debit and a credit. We've got 2 accounts affected for problem number 2. We're good to go on. Number 3, Regina Delgado transferred some of her personal office furniture valued at $3,750 to her business. So we've got Regina Delgado, again, she's adding more to the business. Her capital will increase because of that, $3,750. And she invested office furniture, which is also increasing, so we're going to put that in the debit. Now again, if I'm going too fast for you guys, that's what the great thing about these videos are, is you're able to pause and go as needed. But just remember, you're going to have a lot of practice with these. So if you're still struggling, just know that's why we go through the entire chapter. We have lots of practice. We are actually going to finish this out because I want to show you how you then calculate a new balance. Hot Suds Car Wash purchased additional office equipment for $7,500. Payment was made by check. So anytime we write a check, we know our cash in bank is decreasing. So we're going to put that transaction number 4. Decreasing by $7,500, and we purchased office equipment. So office equipment will increase by $7,500. Okay. So do we have a debit and a credit? Yes, we do. All right, last one. Hot Suds Car Wash sold some surplus car washing equipment on account to Valley Auto for $1,200. So we got rid of car wash equipment. That's going to decrease by $1,200. And Valley Auto said, hey, we want that, but we'll pay you later for it. So $1,200. All right, so in our notes we have the normal balance side, and this is how you're going to determine that. So assets always have a normal balance of debit side. So if we look at our cash in bank, we had a debit transaction and a credit transaction, this dang thing. So what we do is we always take our debit side transactions and subtract our credit side transactions from our debit. So we're going to take $40,000 minus $7,500, and we're going to calculate the new balance in the account, or the normal balance. So we should get $32,500 is our balance. Okay. Then our accounts receivable balance, we only had the one transaction. Same with office equipment. Same with office furniture. Car wash, we had a debit and a credit, so we're going to take our debit side minus our credit side. So if we had multiple transactions here, let's say there was another 2,000 transaction, we would add those together and then subtract the 1,200. So we should get 25,800. All right, so now we move over to our liability account where it increases with a credit, so our balance, our normal balance side moves over to that credit side. And since we had two transactions here on our increase side, we just add them together and we get 43,750. So I believe later on it's going to ask you to add up and make sure that your accounting equation is still in balance. So what you would do is you would add up your asset balances, and then you would add up your accounts payable and liability, or accounts payable or liability and our capital balances, and you would make sure that those still equal. But that's how you calculate a balance in a T account. So alrighty, you guys are on your own for the rest of the activities. Again, feel free to email me if you are struggling, but I think that you guys will be great.